Hey friends, as a dividend stock investor, one of the biggest events of the year, especially now that it comprises 3.3% of my portfolio, is the SCHD reconstitution. This actually just happened on the 21st of March, and I have some big news to share with all of you because the Dow Jones US 100 Dividend Index has reconstituted and has SCHD, the Charles Schwab ETF that tracks this amazing index. And so one of the first things I do when SCHD goes through the reconstitution is I want to understand, hey, how much does it overlap with my existing dividend stock portfolio? Because SCHD, my goal is to build it. It's at like 3.3% right now in my portfolio. I want to get it up to about 10% of my portfolio or more. And the value for me in this ETF is the fact that it brings instant diversification to my portfolio. And so I'm always curious to understand, how does that overlap look? Thankfully, it's still around 30%. It's always around 30%. It's so interesting to me that over the years, it seems that's just held up really well. But as you can see on the screen in front of you right now, this is data that I pulled from the SCHD website. I'm going to link to that in the pinned comment below. It's really easy to export all of the holdings. There's about 100 of them at any given time. And what I do in this analysis is I add a new column. The new column that I add is column C, and it says own ? Do I own it? Do I not own it? I go through all the positions and I mark yes on the ones that I own. I mark no on the ones that I don't already own. And then what I do is I sort it. So you see the yeses at top, the nos at the bottom. And in fact, I included 2 yeses that I don't necessarily own. My wife owns Target, so I made it a yes. My kids own Hershey Foods, so I made it a yes. When I add up all the yeses, 10 of the 100 positions overlap with my existing portfolio. And so that's good. There's not too much overlap by position. And then when I add up the percent of assets in SCHD, it's 29.34%. And so off the bat, when I did this analysis after the reconstitution, it brought me a lot of comfort, again, that Ian, you are investing in this ETF still for the right reasons. Even though they shuffled the deck, so to speak, it still brings huge diversification to your portfolio. But I also looked at this a few other ways, as you can see on the screen in front of you right now. One of the things that I did is I just took out Target and Hershey because I'm like, hey, those are in my kids' portfolio, my wife's portfolio. If I just look at my core portfolio, what's the overlap? It's actually only 26.43%. And so that was comforting as well. But what I did next is I also weighted it. I weighted these positions by percent value of my own portfolio. And in this weighted analysis, I also did not include Target and Hershey, and it came out to 27.79%, which is really awesome. And so again, as you can see on the screen in front of you right now, these are the new positions post-reconstitution. Yes, there's some overlap with my portfolio, but it always seems to kind of sum up around 30% or so. And in this case, I can look in it a few different ways and kind of make it under 30%. But more or less, it's about 30% overlap with my portfolio. I'm happy with that. And you can just see the positions on the screen that overlap: Chevron, ABBV, Coca-Cola, Altria, so on and so forth. But you can see below, you can see ConocoPhillips, Bristol Myers Squibb, Verizon, AMGN, Merck, Cisco, Texas Instruments, Lockheed Martin, so on and so forth. Those are all positions that I do not own individually, but I do own them through the SCHD ETF. So once again, big news, the reconstitution happened. And for me, for my personal situation, I feel good about this because I'm still diversified. The ETF is doing its thing and it's working in my favor in terms of diversification. But I want to go through the reconstitution with a few slides. This is also available on the SCHD website. I'll link to this deck in the pinned comment below. As you can see on the screen, the first slide that I want to share is just what is behind this reconstitution with the underlying Dow Jones US 100 Dividend Index. Well, really what it's attempting to do is find high-quality dividend stocks, for this index. And these high quality dividend stocks over the years historically have had a pretty good combination of starting yield and dividend growth rate. But more specifically, what the algorithm does, and one of the main reasons I own this ETF is because the algorithm does what I'm not willing to do myself. Many of you know, if you've been here for a long time, I like to buy and hold stocks forever. Yes, I will sell stocks from time to time, but it's a very rare, and it's usually only if I need the capital for a higher and better investment, or if I find out that just the stock no longer lives up to my fundamental expectations for the company. But more or less, I like to buy and hold forever. I make a rule of not selling. What I like about SCHD is the algorithm does the selling and buying behind the scenes. It does what I'm not willing to do in my individual stocks. And so I love that. But as you can see on the screen in front of you, what it attempts to do through this reconstitution each year is find the best quality dividend stocks at any given moment that are showing value. And it looks at cash flow to total debt. It looks at return on equity. It looks at the indicated dividend yield, and it looks at the 5-year dividend growth rate. It puts all of those factors into the algorithm, and it churns out the list of stocks that it buys. And let's look at this reconstitution in a little bit more detail. What happened this time? As you can see on the screen in front of you right now are a few key metrics pre-reconstitution and post-reconstitution. So first and foremost, we can see that the free cash flow divided by debt percentage increased quite a bit. And so it went from 59% to 66%. I think that's really awesome. The return on equity percentage, it actually dipped a little bit from 47.47% to 46.79%. Not too bad, but it dipped a little bit. Dividend yield also dipped a little bit from 3.93% to 3.8%. I'm not getting too tied up in that. I'll get into more of that later. But long story short, because they rebalance quarterly and because dividends grow over time, I believe that they will continue as an ETF to grow the dividend aggressively over time. I'll get more to that later. But you can even see it here. The dividend growth percentage pre-reconstitution was 7.93%. Post-reconstitution, 8.35. So we can see dividend growth is going up. And so what I believe is even though short-term dividend yield dipped just a little bit over the next 4 quarters because dividends are going to keep growing most likely and because they're going to rebalance quarterly, I believe as an investor I'm going to see the dividend of this ETF continue to grow pretty aggressively over time. Will it be as high as the 11+% that it's been for the last 5 years? That I don't know, but I think it will be strong, and I think it will continue to be a solid contender for what I've been able to drive myself in my individual stocks, which I'll get to later. But first, as you can see on the screen in front of you, I have another slide. What you can see this time are we have some additions and deletions of note. And so you can see in terms of additions, they went kind of heavy with some energy sector stocks like ConocoPhillips and Schlumberger. You can also see some healthcare, some consumer staples as well. Those are the additions. In terms of deletes, I think the really notable ones are Pfizer, BlackRock, US Bancorp, and in particular, what I would point out is financials were really deleted from the portfolio this time around. And so what I saw when I looked overall, energy sector went way up, financials went down a bit, and it looks like consumer stocks are kind of strong as well. And that makes sense because consumer stocks in general in the market have been kind of left behind a little bit these last few years, and it seems that the algorithm is trying to pick those stocks that are presenting the best value right now. But as you can see on the next slide in front of you right now, this one actually goes down into the categories, and you can see that again, energy, wow, pre-reconstitution was 12%, now it's 21%. I love this, and I wanted to point this out because my personal dividend stock portfolio, look, this has 30% overlap with my portfolio, but with the 70% that does not overlap, I want diversification. And in general, I don't really want diversification in kind of like the types of stocks I own, consumer stocks and restaurants. I want the overlap or the lack of overlap to be in sectors that I do not have representation, like energy. So I love this. I have a little bit of energy in my main portfolio, but not too much. And so having 21% of SCHD being in energy, I like that. Consumer staples, honestly, I wish it didn't jump from 15 to 18.7, but I understand it because a lot of these are on sale right now. I already have a lot of consumer staples. That's why I'm saying that. Industrials, it's pretty even. I like that. I would like more exposure to industrials. Technology, it's pretty even. Pre-reconstitution, post-reconstitution. I like that because hey, at that solid 7.9%, that's strong, and I lack exposure in my main portfolio to technology. Financials, you can see, though, took a hit. It went from 17.2% to 8.5%. It dropped a lot. I didn't like seeing that, to be honest, because I would like more exposure to financials because I don't have too much exposure in my main portfolio. Also, as you can see on this slide at the bottom, wow, just over long periods of time, this Dow Jones US Dividend 100 index, which SCHD is trying to track, has done very well. 11% returns on average per year for the last 10 years. Since inception, even higher, 13%. And so, and the fund has tracked it pretty well. You can see the numbers over time. The fund has done a pretty good job, SCHD, as tracking the Dow Jones US 100 index, which it's attempting to do. And so with SCHD, I wanted to share some of my recent buy orders because this, I think, helps put some context into things. By the way, I just shared a whole portfolio update, percentage allocation to each position on my Corner Patreon. Also on Corner Patreon, I have a Zoom meetup this Friday. On all of my Patreon, I share my trades. And I'll link to my Patreon in the pinned comment below. But my patrons have already seen this. But I want to point out, as you can see, I've been buying SCHD. I've built some momentum as a dividend investor. These days when I'm buying, I have a hard time kind of thinking of buying anything else because my number one goal for this year, if you remember in 2025, and I'll link to that in the pinned comment below, was bringing SCHD to size, which means a top 5 position, if not getting close to my number 1 position. But as you can see in my last few buy orders, in particular on this screen, nothing too exciting. The price per share has been hovering in the 27s and 28s. The starting yield, based on the last 4 dividends, has been kind of hovering around 3.7%. And you can see the comparable 4 dividends from 5 years ago was quite a bit lower, putting the growth rate at upwards of 11% per year on average of that dividend. And what's crazy to see is the net asset value of the fund now is around 70 billion. So this is a very big ETF. A lot of investors like myself have come to rely on it. But what I really want to hone in here is recently they increased their last distribution. You can basically see there that on my 3/24/25 trade, this is before they increased the distribution, you can see that the last 4 dividends were 26 cents, 25 cents, 27 cents, and 20 cents. But they just announced the new dividend, and that new dividend is 24.8 cents. And that one basically replaces the one that fell off at the bottom that was 20 cents. And so you can now see the 26-cent dividend, it's still there. The 25-cent dividend is still there. The 27-cent dividend is still there. But that one from my 324 trade, the 20.36-cent dividend, it's gone. And so 24 cents, 24.88 replaces 20.37. So the reason I'm pointing this out is I think some dividend investors are getting a little freaked out when they look at the reconstitution. They see, wow, a lot changed here. Energy is way up. Financials are way down. We're seeing a lot of change happening right now that's a little bit scary. And they're also seeing, hey, the implied dividend yield right now, it's kind of gone down a little bit. But the reason I share what's on the screen with something like SCHD, it's a little bit more difficult to analyze than a stock. Like Altria, for example. Altria tends to grow the dividend over time, grows it annually. It's easy to look, hey, the dividend just keeps going up and to the right. But with something like SCHD, because it owns a lot of stocks and it's reconstituting once a year, it's rebalancing quarterly, the dividends are paid on different schedules for different companies. The quarterly distributions over time, they can kind of go up, they can kind of go down. But as you saw with the last one that went out, it replaced a prior distribution that was lower, which is good. And you can see that over time, it's been growing over the last 5 years by about 11% per year on average. So I'm going to allow this thing just to do its job. I'm going to allow the algorithm to do its job. And a year from now, let's check back and let's just see what was the year over year CAGR for the dividend. I believe it will continue to go up, but it's a little bit more difficult to analyze on a moment-by-moment basis like an individual stock like Altria. That's why I'm sharing all of that. But I want to share more. I want to share my summary. What does SCHD mean to me? Why do I own this thing? What's it all about for me in my own personal situation? Well, as you can see on the screen, why I love this thing. And so why I love it so much right now in 2025. The algorithm does what I'm not willing to do. I already talked about this, but in terms of individual dividend stocks, I like to buy and hold forever. I just can't bring myself to sell unless the stock has deteriorating fundamentals or I need the capital for another investment. It brings me instant diversification. I love this exposure to financials and energy in particular, which I lack. I'm light on it in my individual stocks. My corner patrons have seen all of my individual stocks, percentage allocation to each of them. There's low portfolio overlap. It's still around 30%, maybe less if I kind of look at the numbers different ways. This is hands-off passive investing. There's not much analysis required on an ongoing basis. Look, I do these videos because I love looking at this, and I know many in the community enjoy it as well. SCHD is really popular amongst dividend investors. But do I really need to look at this ETF day to day or even pre-reconstitution, post-reconstitution? No, I look at it because I love looking at it. Now with individual stocks, by contrast, I have to look at them. And in 2025, with our world being more crazy than ever before, there's a lot happening right now in our world, a lot of change. Look just at AI and what AI is doing to disrupt different sectors. I have to look at the individual stocks closely. I don't have to do that with SCHD because the algorithm does the work for me. But as you can see on the screen in front of you right now, a few more things. Why do I love this ETF so much? It's the perfect combination for me of a starting yield, good starting yield, dividend growth, tax structure, hey, it's qualified dividends, and risk, meaning not too much risk, not too little for my personal situation. It's kind of the perfect thing for my personal risk tolerance. Honestly, it's difficult for me to beat the performance. My portfolio overall, it is a starting yield of 3.6%. It is a 5-year CAGR of 5.33%. My corner patrons already know this because I just revealed my dividend portfolio update percentage allocation to each position. SCHD, by contrast, has a starting yield that is higher than my portfolio. It's at 3.7% using the trailing 12 months dividends, and it has a CAGR of 11.4%. So if we just look at my portfolio, we look at SCHD, look, I'm just sharing the honest truth with all of you and myself. I am better off instead of just buying my overall portfolio as is, probably buying SCHD because it offers a better starting yield and faster dividend growth. That being said, there's a key caveat here, and the key caveat in my individual portfolio is I don't buy it all as a basket at one time. I like to buy the individual stocks when they're on sale. And because I have cherry-picked the individual stocks at the best possible prices, or at least I attempt to do so, you can't really look at it the way I just shared. You can and you can't. And so as an individual investor, I look at it that way to keep myself kind of focused and making good decisions. But also I have to remind myself, hey, Ian, when your individual stocks are on sale and you see them on deep discount, that is a really viable alternative because as you can see on the screen, let's look at this. I have an example there. And one of the examples, this is under 6C, is just Altria. I'll link to the video in the pinned comment below. Many of you remember I made one of the largest stock trades of my life back in December of 2023. I bought a lot of Altria at $40.19. It was on sale. Well, hey, now it's at $58.79, so I'm up 46% on that tranche in terms of capital appreciation, and I locked in a 10% yield on cost. The way I did that is not by just buying my overall portfolio as a basket all at one time. I did that by cherry picking Altria when it was on sale. And so again, I like to look, how is SCHD comparing to my portfolio overall? And that's good. It reminds me to buy SCHD, but I also have to remind myself, yeah, but Ian, buying individual stocks when they're on sale, you are uncovering a lot of value and probably rivaling the performance of SCHD that way as well. But what else about SCHD? Where am I going with this thing? As you can see on the screen in front of you right now, I kind of started the video with this, but I just want to remind everyone, wow, right now I've built this up to 3.36% of my portfolio. That may not sound like much, but I only started buying SCHD in recent years, and my portfolio is a mature portfolio. It's my number 13 largest position. I'm proud of that. I've come a long way. In terms of the future, however, I'm attempting to grow SCHD into my top 5 this year and eventually number 1. I think I can get top 5 this year. I think I can. Number 1, it might take another half a year or maybe even up to 2 years. So that's where I'm at. That's the big news today. If you enjoyed the video, please go ahead and click the like button. It means the world to me. And before you go, if you love this video, you want to see more from me, please don't forget to subscribe. It really helps me out. Before I go, in terms of a full disclosure, I own the stocks mentioned today. In terms of full disclosure, I'm long the ETF, SCHD. I am long the stocks, Chevron, CVX, ABBV, ticker ABBV. I'm long Coca-Cola, KO, Altria, ticker MO. I'm long PepsiCo, PEP. I'm long the Home Depot, ticker HD. I'm also long Kimberly-Clark, KMB, General Mills, GIS, Pfizer, PFE, and I'm long Bank of Hawaii, BOH. I own those in my personal dividend stock portfolio. Also, my wife is long Target, TGT. My kids are long Hershey, HSY. Those are positions that I own or my family members own in our personal portfolios. Before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Please consult your licensed investment advisor before making any financial decisions. I'm just sharing my journey, as always, for fun and entertainment. And as always, in the description below, I have additional disclosures and disclaimers. Thank you so much for watching the video. I love you all. I can't wait to see you in the comments below. Let me know what you think about the reconstitution, and I'll see you in the next dividend stock investing video.